Trevor Loewensohn from Alceon Group, welcome to the Alternatives Symposium.
Thank you very much.
Can you provide some background into what Alceon Group does and your approach to private markets?
Alceon is a private mid-market investor who are looking to generate superior risk-adjusted returns for our clients with bespoke opportunities that are tailored for the particular circumstances, both of the underlying investment and the current market cycle.
And what does that universe of underlying investments look like?
Predominantly real estate related. So we have $4 billion of funds under management, of which $3 billion is in real estate, and the remaining $1 billion is split between listed equities, credit, and private equity. And then the real estate obviously has a whole bunch of subsectors, including residential, commercial, retail, and some other subsectors.
And could you expand on Alceon's debt investing or credit investing and how you differentiate and where you sit within that market?
So our debt investing is predominantly focused on the residential market, and we have very deep domain expertise in the residential market, and that's our primary differentiating factor. We've played in all aspects of the residential market, from debt to equity to mezzanine, and we have ownership and relationships with builders and developers that allow us to actually operate and manage those assets with extreme expertise.
And what do you see as the key benefits or the drivers of growing demand for this asset class and within portfolios?
Well, fundamentally, from an investor perspective, your core objective should be to get the best possible return with the least amount of risk, and residential lending provides that in spades, and has been a very mispriced asset class for the last 5 years, where we've been able to generate very, very good returns for very low risk. And we have actually, in our 10 years, we've actually only lost a tiny amount of money on one small equity deal. We've never lost $1 in any debt or return in any debt deal ever.
And that's a good point. A follow-up question would be, what are the most common misconceptions about your strategies?
I think people get nervous about residential markets generally because they're such a high-profile news item and because they're so volatile in the media sector. And so there's a misconception that it's risky, and it's actually not risky at all. There are almost no circumstances where, if you know what you're doing in that respect, that a lender should lose money. Obviously that means that you're being sensible about your leverage ratios, but your ability to operate and manage a development or to look at a block of land and know what it's worth, all those sorts of things mean you should never lose money on that. And we have never lost any money.
And you've got an extensive career in private public markets. How have you seen the industry and the sector evolve in the last 10, 15, 20 years?
I think there's been a tendency to try and access those particular real estate asset classes in particular through the listed markets, in part because people have been very comfortable with property trusts generally, and the residential asset sector actually hasn't been a big pooled investment market. Yes, people buy units and investment properties on their own, and generally they have to be lucky in terms of cycle. But now we've evolved into capacity to provide that to the wholesale markets on a very considered basis, where people can get to understand better that someone expert is managing their risk and their return.
And if you had advice for the financial advisors in attendance today when looking at these kind of strategies, what would that be?
I think that this is a very important asset class for you to give your clients superior risk-adjusted returns with a high degree of safety. If you want an asset class that you can be very confident you're going to earn your returns and sleep well at night, and look your clients in the eye on behalf of whom they're investing, you have to have a portion of your portfolio allocated to the residential debt and commercial debt space.
Trevor Loewensohn, thank you.
Thank you very much.